Welcome back to the Wall Street Podcast. Today, we're doing a deep dive into a Nomura Securities report. It's titled China Internet and New Media, Takeaways from Douyin E-Commerce Expert Call, and it came out September 5th, 2025. It gives some pretty critical insights into Douyin's e-commerce side performance, growth, strategy, where it's headed. So our mission here is to unpack this. We'll look at their revised GMV targets, operational improvements, their approach to quick commerce, and importantly, AI integration. Basically, trying to see if Douyin is really going to shake up China's e-commerce scene. First thing that really jumps out is this big upward revision for Douyin's FY25 gross merchandise volume target. Their growth seems to, well, surprise people.
It certainly has. Nomura is now projecting Douyin's FY25 estimated GMV somewhere between RMB 4.4 and 4.5 trillion. That's about 25% to 32% year-on-year growth, which is robust. It really marks a significant shift, doesn't it? From mostly content to a serious transaction platform. It could reshape market dynamics faster than expected, solidifying them as, China's third largest player.
Right. And efficiency-wise, the report also highlighted some marked improvements in operations.
Yes. Particularly the product return rate. It's apparently fallen to 44% now. That's down quite a bit from over 51% at the end of 2024.
44% still sounds a bit high, maybe.
Well, perhaps compared to some mature markets, but the drop is key. That 7-point decrease suggests they're really optimizing things, improving merchant protection, boosting trust. It points to better overall operational performance.
Okay, interesting. Now about quick commerce, that super fast delivery stuff. Douyin seems cautious, unlike some rivals.
That's right. Nomura points to three things here. First, their traffic is different. It's more entertainment-driven, less intent-based searching compared to rivals. That makes quick conversions trickier. Second, their existing fulfillment setup. And third, they haven't really proven the cross-selling synergies yet. So they are building out a QC supply chain, but it's part of their supermarket business, taking it step by step.
Makes sense strategically, build a strong foundation first. But isn't there a risk, in China's market, that being too cautious means missing the boat?
It's a fair question. But the report suggests Douyin is playing the long game here. They're not ignoring quick commerce, just ensuring their entry is, well, strategic and properly integrated, rather than just a mad dash, avoiding potentially costly mistakes, perhaps.
Okay. And beyond logistics, AI seems to be a huge piece of their strategy.
Absolutely pivotal. The use of AI, especially large language models or LLMs, not just surface-level stuff. They're using it for everything from inventory to hyper-personalized recommendations, turning that passive browsing into active shopping. It's key for efficiency, user experience, better recommendations, and even creating sort of new traffic gateways on the platform.
Let's dig into that GMV growth again. Beyond the strong Q1 and Q2 numbers, what's the core reason they managed to revise that FY25 target up so much?
Well, for you, the listener, thinking about the market, it shows Douyin has really cracked monetizing its user base via e-commerce. It wasn't just a fluke in the first half of 2025. It stems from effectively turning content engagement into actual purchases. Leveraging that huge ecosystem they have, they've become a genuine third-party platform.
And the falling return rates, that 7-point drop, what does that really signal for you as a consumer? Does it build real trust? And what about the merchants?
For merchants, it directly impacts their bottom line, their confidence in the platform. That's crucial. For you shopping on Douyin, it should mean, hopefully, more reliability. Better product descriptions, fewer hassles. It suggests the platform is maturing, focusing on quality, which usually leads to more consistent experiences, and yes, gradually increasing trust.
So how does the cautious, quick commerce stance square with the aggressive AI push? Couldn't AI actually help them speed up their QC plans if they wanted to?
It could, theoretically. But Douyin seems to be using AI to build foundational strengths. First, personalization, operational efficiency. The report suggests they see quick commerce as having unique logistical and traffic challenges that AI alone won't solve instantly. They're prioritizing sustainable growth, using AI for smart expansion, not just rushing into QC because others are. It's about strategic integration.
Okay, bringing this all together, how might these shifts actually change the daily e-commerce experience for the average person?
I think you can expect shopping to feel even more personalized. AI driving recommendations that feel almost predictive, Better operational efficiency should mean more reliable deliveries, fewer headaches there. And as platforms like Douyin keep refining things, you'll likely see shopping blend even more seamlessly into your social media feeds, maybe shifting some habits away from the traditional search-based e-commerce sites. It diversifies your options.
So this deep dive certainly shows a dynamic e-commerce landscape. Douyin's moves, driven by strategic tech and focused execution, are fascinating. The final thought for you then is, how might these kinds of platform-specific strategies ultimately reshape your own digital habits, and what ripple effects could that have on the wider market?